We are so excited to hear from the experts at the Student Borrowers Protection Center. It is a national advocacy organization that is responsible through lawsuits, through fraud investigation, and by spurring public policy changes that have helped halt abuses by the student loan industry. And I am so very pleased that they are here today to assist Maine borrowers with accessing that program. Let me first introduce to you the head of the Student Borrower Protection Center, Seth Brotman. Seth is the nation's leading policy and legal expert on student borrowing. He frequently testifies, lectures, and is called upon by the national media across the country to speak about the effects of education debt on individuals and communities. He routinely helps policymakers, including more than a dozen state legislatures, to pass laws to increase state-level oversight of the student loan market, including here in Maine. Seth was instrumental in helping Maine pass the Student Borrowers Bills of Rights. We have two, one for federal loans and one for private loans. And these state laws protect borrowers at the state level from misleading or abusive servicing practices in the absence of strong enforcement by the federal government. I also have to say, on a personal note, Seth is fearless. He flew into Maine in December 2019 in a raging snowstorm, drove from Portland to Augusta on icy roads to speak at our consumer rights conference, and he never batted an eye. So please join me in welcoming Seth Brotman.
Thank you so much, Jody. Again, my name is Seth Brotman. I am the Executive Director of the Student Borrower Protection Center. And one of the best things about my job is the ability to travel around the country. Used to be on planes, including little prop planes to Maine, and now through Zoom and webinars like this, talking to just amazing people who every day fight on behalf of hardworking families. And none is better than Jody and MISAP in terms of understanding the challenges that individual folks, individual families, and their communities face in trying to make a more fair, just economy and society. And I've just been so impressed by everything that they do and everything they have been able to accomplish. And it is through their hard work and amazing legislators like Senator Vitale and so many others that has really set up Maine to be a national leader when it comes to trying to protect people with student loan debt. And, unfortunately, that is something that I know many of the folks joining us today have felt, and so many others. And sometimes it's upsetting even to think about that you have millions and millions of folks who have done nothing wrong, but simply take on debt to try to get a better life for them and their families. And they face a range of predatory practices, of unscrupulous businesses that drive them deeper and deeper into debt. And I have been doing this for, unfortunately, way too long. And some of the most tragic and infuriating stories come from dedicated public servants who have been denied the promise made under the Public Service Loan Forgiveness Program. And you're going to hear more about this from a true expert, Chris Hicks, in a minute. But I'm sure many of you are well aware of what Public Service Loan Forgiveness, or PSLF, is. But in short, more than a decade ago, the federal government made a promise to teachers and nurses and social workers, members of the military, that if they were willing to give a decade of their lives back to their community, back to their state, back to our country, that at the end of the day, they would see their student debt forgiven. And when this promise was made, Americans, student loan borrowers from Maine, did exactly what we wanted them to do. They taught our kids in the classroom. They took care of our parents when they got sick. They joined to serve our military and keep us safe. And in the process of doing so, they took on billions and billions of dollars of debt to do the jobs and to be the best public servants they could be. And 10 years went by and they applied to try to get forgiveness. And time again, they were denied. So much so we have a 98% denial rate for this program. And we see that year after year. And this is something that we are demanding, MECEP is demanding, and so many across the others are demanding be changed. President Biden has said that this is one of his top priorities to fix this program. And we are doing our best to hold him accountable to that promise. So today you're going to hear a couple different things from our experts. One is, if you think that you should be entitled to this program or are struggling with this program, you're going to hear from Chris about the steps necessary to try to get enrolled and ultimately get forgiveness. But one of the main things we also want to talk about, which we know that MECEP and many of you have done so well, is to force the federal government to actually fulfill its promise, to organize and advocate for all of the millions and millions of dedicated public servants who have done everything we've asked of them. And all they want is the federal government to fulfill its promise. And Chris is going to talk about the steps that you could take, your organization can take, to try to help in those regards. So I just wanted to say thanks again. Hopefully the next time we do this, it's not over Zoom, and I'd be happy to face a blizzard to get out of my little house and get back on the road and see all of you in person. But with that, I'm going to turn it over to Chris to talk more about the PSLF program and steps we could take to fix it.
Thanks, Seth, and hi, everyone. My name is Chris Hicks. I'm going to be sharing the screen real quick. Let me just get this set up. Terrific. So we're going to be talking about public service loan forgiveness. Like Seth said, I'm going to start by just giving a quick overview of how public service works today. And then towards the end, we're going to be talking about how you can engage in this current process to make changes to the program moving forward. And then there's going to be time for Q&A. So as I go through this, I'm going to be going over some sometimes complicated, sometimes just like very wonky stuff. And if at any point any of this is confusing, just jot down the question in the Q&A section or put it into the chat. We're definitely gonna have time to go over any questions you've got, anything that doesn't make sense, or if you just want to clarify something. I feel like most of the time, you've heard this before somewhere else, you are putting everything together and you just need someone to say, yeah, you're understanding this right. So this is our agenda today. I'm just going to do a couple quick slides about the student debt crisis as it stands today. We're going to go over public service loan forgiveness, a few quick things about what's happening today with the student loan system, and then we're going to get to Q&A. So if this all looks good. So over the last decade, student debt's grown by more than $1 trillion. When I started college in 2005, I think student debt was largely described as like a kid's problem. It's something that happened to young people. It wasn't happening to everyone. And now when we talk about student debt, we recognize it as a national problem. It's grown so quickly. It's impacting 1 out of every 5 families. There's more than 8 million people in default, millions more struggling to make their monthly payments, and it's a drag on our entire economy. So the way we think about student debt's really changed in the last decade, and I think that's important to recognize. A lot of the programs that were created back in like 2005 to 2008, you know, when policymakers were creating those, they were thinking this would be applying to a small bucket of people, which kind of explains why we have some of the problems we have today, but it also explains why there was so little oversight. We also see that student debt is growing quicker for households than most other types of debt. And I say most, it's really all other types of debt for every age range. So if you look at this, over a 10-year period, student debt grew 152% for household balance sheets. But that's true for older Americans, that's truer for younger Americans. I think a lot of times when we talk about student debt, people talk about it as impacting millennials and Zoomers, people younger than that. But what we've seen is student debt balances are growing for retired individuals, older Americans, people in the age range of 40 to 60 that should really be saving for retirement. So this is something that's impacting Americans across the country, and it's something if we don't address is going to be an even bigger drag on our economy than it already is. So I just want to put that in context. Student debt, just to compare it against these other forms of debt you see here, is the second largest form of consumer debt in the country. Mortgage debt is the only debt larger than student debt. And in part to address that, Congress created a program called Public Service Loan Forgiveness. Public Service Loan Forgiveness, Seth mentioned this, it was created more than a decade ago. It was created 14 years ago when George W. Bush was president, with a very simple intent. Congress, when they passed this, they actually said it like on the floor of Congress. Anyone who spends 10 years in the public service should have their loans forgiven. No more complicated than that. 10 years public service equals 100% of your student loans canceled, tax-free, no questions asked. Unfortunately, what we've seen is once this passed and was then sent to the Department of Education, there were more criteria put into place. So in order to qualify for public service loan forgiveness, you're going to have to meet these 4 specific criteria. And what we've seen is that these 4 requirements, while they seem really simple and straightforward, have tripped people up at every step of the process. And as Seth mentioned, has led to 98% of people being rejected. I'm going to go over each of these requirements in detail, but just very quickly, the 4 things you need to do in order to be eligible for public service loan forgiveness is you have to have the right kind of loan, you have to be in the right repayment on that loan, you have to be working in the public service full-time, and you have to make qualifying payments, which really means full on-time payments 120 times. You have to be meeting all 4 of these criteria every month for 120 months or 10 years worth of payments, and then your remaining loan balance is going to be canceled. So again, there's a lot more detail than just saying, have the right kind of loan, be on the right kind of repayment plan, work at the right place, and make payments on time. So we're going to break this down a bit more. So the first requirement for having the right kind of loan, this is the #1 reason why people are being denied public service loan forgiveness today. Only direct loans are eligible for public service loan forgiveness. If you took out a loan from the federal government after 2010, after October 2010, you most likely have a direct loan already. That's the primary type of federal student loan today. It's the only loan that the federal government currently gives out. But if, like me, you were in school before 2010, you may have what's called a FFEL loan, or a federal family education loan. This was the primary loan type when I was in school in the 2000s, and much further beyond that, like in the 90s, this is what you most likely would have received. It was about 80% of all student loans were these FFEL loans, or federal family education loans. So older borrowers tend to have these. Same with Perkins loans. If you got a Perkins loan from your school, these 2 kinds of loans are not going to be eligible unless you consolidate them first. Consolidation is not a difficult process. If you go to studentloans.gov, you can start the process online. It takes about 3 weeks from start to finish to complete, and then you'll have a direct loan. But millions and millions of people were never told by their student loan company, which would be Navient, would be Fed Loan Servicing, Mohila, Nelnet, Great Lakes. If any of those names are familiar to you, that's your student loan company that's been assigned to you by the Department of Education. They've not told people they need to take this step to consolidate their loans in order to become eligible for public service loan forgiveness. So what happens is people will make years of payments on their student loans, go to apply, and then find out this entire time they've had the wrong kind of loan. Again, this is the #1 reason why people are being denied. So the program was created in 2007 under President George W. Bush. At that time, most people had these FFEL loans, and all they heard when this law passed was, work 10 years in the public service, you'll have your loans forgiven. So they didn't know they needed to take that extra step. So if you need to consolidate your loans and you have both older and newer loans, so if you have these FFEL loans, but you also went back to school to get a master's and you went back in 2012 and got a direct loan and you've been making payments since then, you'll want to make sure that you only consolidate your non-eligible loans. Because if you've made qualifying payments on an existing direct loan and you consolidate it with an older FFEL loan or with a Perkins loan, that's going to, what happens is the Department of Ed pays off your old loans and then consolidates them into a new one, which means you've never made a payment, you've never missed a payment. So any qualifying payments you've made on your direct loan will be wiped out. So all you have to do when you go to consolidate is you actually select which loans you want to be consolidated. If you've made qualifying payments on a direct loan, just don't select it. It will then be omitted from the consolidation process and you won't lose any qualifying payments. Now, if you've taken out a Parent Plus loan for your child, you can also consolidate those in order to become eligible for public service loan forgiveness. You'll want to make sure that you consolidate the Parent Plus loan separate of other loans. You don't want to miss out on other benefits that Parent Plus loans are not eligible for. For anyone with a Parent Plus loan, you're going to be limited in types of repayment plans, you're going to have higher interest rates. So you'll just want to make sure you keep those Parent Plus loans separate if you need to consolidate them. But step one is having the right kind of loan, and that's a direct loan. So that's going to be a subsidized direct loan, unsubsidized direct loan, consolidated direct loan. You just need to make sure the word direct appears on your monthly bill or in your studentaid.gov account, and that's how you know you're on the right track. If you don't see the word direct, you might need to take that consolidation step, and all you need to do is go to studentloans.gov and you can do it there. The next requirement, you have to be in the right kind of repayment plan. So only two types of repayment plans really qualify, and that's going to be income-driven repayment plans and the standard 10-year repayment plan. So when Congress created public service loan forgiveness, the idea is you would get, if you worked 10 years in the public service and made affordable payments, affordable to you, you would be able to have your loans forgiven. So what affordable means here is income-driven repayment plans. Income-driven repayment plans are repayment plans that determine how much you owe every month based on what your earnings are, not how much you borrowed from the government on your student loan. So this isn't going to operate like a mortgage. It's possible that you can make 20 years of payments in income-driven repayment plans and not have paid it off. In fact, you can pay as little as $0 every month. So sometimes this trips people up if they've taken out mortgages or if you're looking at credit card debt, because income-driven repayment plans operate differently. It's based on what you earn and how big your family is, not how much you owe. So really take advantage of public service loan forgiveness. You want to be in an income-driven repayment plan. If you go to studentloans.gov and log into your account, you can go to the repayment estimator and see what you would pay under the various types of income-driven repayment plans and which ones you're eligible for. Income-driven repayment plans, an umbrella term. There's really 4 plans under that. It's income contingent repayment, income-based repayment, pay-as-you-earn, and revised pay-as-you-earn. Any of those are called an income-driven repayment plan and are going to be qualifying for public service loan forgiveness. Another plan that always qualifies is the standard 10-year repayment plan. The standard 10-year repayment plan is the way they grandfathered people in as they stood up all the income-driven repayment plans. For most people, this isn't the repayment plan you want to be in if you want to get public service loan forgiveness, because if you make 10 years of payments in a standard repayment plan, that means you'll have paid off your loan. This is like a traditional 30-year conventional mortgage, where every month's payments, if you make all of them on time for the full amount, you'll pay off the conventional mortgage. This is the same, but with student loans. So if you make 10 years of payments on time and pay the full amount, you'll pay it off after 10 years. So if you're trying to get loan forgiveness in a 10-year forgiveness program where you have to make 10 years of on-time payments, you would have paid it off in a standard 10-year repayment plan. So the real way to get the benefit of public service loan forgiveness is through income-driven repayment plans. Extended repayment plans are not going to qualify for public service loan forgiveness, and sometimes those are about the same dollar amount as an income-driven repayment plan, and student loan companies have pushed people towards them. Those are typically not the best bet for most borrowers. So make sure you're in an income-driven repayment plan or the standard 10-year repayment plan if you're hoping to get public service loan forgiveness. Now, graduated repayment plans are repayment plans that increase gradually over time. Every 2 years, you'll pay a little bit more than you were previously. These can qualify for temporary expanded public service loan forgiveness, which was a program created in 2018 that helps some borrowers who were misguided by their student loan servicers like Navient, where if the final 12 payments you made in a graduated repayment plan are greater than those of an income-driven repayment plan, it will count. But the easiest way to make sure you're on track for public service loan forgiveness is to be in an income-driven repayment plan. If you need to consolidate your loan, as we talked about on the last slide, you can actually select to move into an income-driven repayment plan as you begin the consolidation process. Now, the third requirement, I think, is the most obvious for most people, but you have to be in the right kind of employment. This is just any public service. So it doesn't matter what you do. You can be a teacher, you can be a janitor, you can be a principal, but as long as you work for a public school, that's what matters. So it doesn't matter what you do, it matters where you work. Public service is a really broad term. The Consumer Financial Protection Bureau estimates that 1 out of every 4 workers in our economy meets the definition of public service. It's any level of government, so federal, state, county, municipal, tribal territory, or any qualifying nonprofit, which is most often 501c3s. Other not-for-profit employers can qualify. You'll just have to make sure the service you provide qualifies. So places where I've seen this might be something like providing healthcare. So if you're unsure, you can always ask your employer if you work for a nonprofit, if you're unsure if they're a 501c3, you can always ask your manager, your employer, what status you are, and look it up at studentloans.gov and see if that will qualify. And if you can't find it, you can always email us. You can always email me, Seth, and we can help you put that together. The other requirement of employment is you have to work full-time. This is a minimum of 30 hours or whatever your employer defines as full-time. So if you work multiple, like I used to work at the American Federation of Teachers, organizing contingent faculty members, adjuncts, graduate students. Very often they would work at multiple public institutions. And if they added all of their hours together across 2 or 3 institutions, they would meet this 30-hour criteria. That will get you to full-time. So it doesn't have to just be one employer. You can combine multiple employers. But an important caveat is when you send in your employment certification form, which we're going to talk more about later, you'll want to send them all in at once. That way, when they're reviewing your application, they can see that you're working 30 hours. If they get it piecemeal, so you send in one that shows you're working 5, one that shows you're working 20, one that shows you're working another 5, they're going to reject them each because they're going to see 5, 20, and 5. So you'll want to bundle them all together and send them in at once. So you can combine multiple jobs, so long as they're all qualifying employers. It just needs to be 30 hours a week. But if your employer defines full-time as 35 or 40 hours, they can decide not to sign your employment certification form. You can check a box on the form. Again, we're going to talk about this more in a couple of minutes, so that you can be checked for that 30 hours a week. But this has caused some headaches for people along the way. The final requirement is you need to make the right number of payments. So you have to make 120 qualifying payments, or 10 years worth of payments. These payments need to, 1, be made in full, which means if you're even a couple cents short, that payment will not count towards the 120. The Department of Ed has a $5 leniency program. So if your student loan company sends you a bill where they've calculated your monthly bill wrong and they're off by $1, and you send in the bill you got, the Department of Ed will say that payment does not count, but because you're within $5 of the total full payment, they don't tell you that you've made a incomplete payment. They just roll it over to the next month. So then they will deduct $1 from your next month's payment to make up for this last one. And that creates this rolling delinquency problem. So every month you're $1 behind because a year ago, your student loan company miscalculated what you needed to pay. And you just did what you were told. So you have no idea that you are making incomplete payments. If you look at some of the comments that have been submitted to this public comment period that we're going to encourage you to submit your comments to, you'll find that thousands of borrowers have experienced this problem where they paid just a couple cents too little 1 month without knowing it. And that knocked them off track for the next couple of years because the Department of Ed just kept subtracting their next month's payment, which meant they were never making full payments. So it's crucial that you make sure you're making payments in full. And we're going to talk about how you can check that. Partial payments within 15 days of the due date are going to count moving forward. But if you've had problems with this in the past, these are stories that are very important to make sure the Department of Ed captures because this is something they can fix. And in the last few years, the Department of Education has changed the policy so that you can make early payments, but only up to 12 months. So if you work for an employer that has a student loan reimbursement program where they make payments on your behalf, one issue that we used to see with employers is they would make them in a lump sum. So they would send a year's worth of benefits to your student loan company, and then it was on the student loan company to distribute it correctly. And we saw that was often a problem. So now the Department of Education allows you to make prepayments for up to 12 months. But in the past, this might have been an issue you would encounter where if you paid early, you were moved into paid ahead status, which is not paying in full. So we saw people were being penalized for paying early. So these are the 4 requirements of public service loan forgiveness. To make sure you're on track, to make sure you've got a direct loan, to make sure that you're in the right kind of repayment plan, to make sure that your employer does qualify, and to make sure that you're making on-time full payments, the easiest way to check that is to submit an employer certification form or an ECF. If you were to Google employment certification form, public service loan forgiveness, it's going to pop right up. If you call your student loan company, they will send it to you. You can also visit studentloans.gov and find it there. But what happens is you submit an employment certification form, and it's going to require you to fill out some of it and your employer to fill out some of it. So you need to talk to your manager or HR and have them complete a few portions of this. You are going to write down your information, your start date, all of those things. Then your employer is going to verify the information you put down. They're going to sign it. They're going to put their contact information. You're then going to send it in to Fed Loan Servicing, who's one of the larger student loan companies that the department has contracted. The very first thing they do is make sure your loan qualifies. So they're going to make sure you've got a direct loan. If you do, your loan will be transferred to Fed Loan Servicing. So if you're currently serviced by Navient, Nelnet, Great Lakes, Mohila, Granite State, any of those companies, there's about a dozen of them. You will no longer send your payments to them. Your loan will be transferred to Fed Loan Servicing, and you will start making payments with Fed Loan Servicing. I bring that up because sometimes people, we talk so much about the student debt relief scam companies. Once you start getting mail from Fed Loan Servicing, don't throw that out. That's real. They might be, I would argue they've got some problems, but they are not one of those scam companies. You should open up the mail. So after your loan is transferred to Fed Loan Servicing, they're then going to look at your employer. And if your employer qualifies for public service, they're then going to look at the payments you've made since October 1st, 2007, which is when this public service loan forgiveness went into effect. And they will calculate how many payments you've made that qualify where you were working full-time in the public service, were making payments on a direct loan and a right repayment plan, and the payments were all full. So they're going to go back to October 1st, 2007 and individually count those. Now, we encourage you to do this every year and every time you change jobs. This is not required. You can wait until the end of 120 payments and submit everything at once. But we find that this is the best way to find that everything is going right, or if something's going wrong, you can fix it. You don't want to miss 2 years of payments and then, or make 2 years of payments and then find out something was off and those payments don't count, because that turns a 10-year program into a 12-year program really fast. So we encourage you to submit these every year. So in the upcoming months, there will be a big change to this. And I just want to take a second to talk about that. So two of the federal student loan companies have announced that they're leaving the market. They've told the Department of Education they don't want to keep servicing student loans. And one of those is Fed Loan Servicing. So that means for the remainder of this calendar year, you will still send in these employment certification forms to them. You will still be transferred to them. But come December to sometime in early 2022, your loans will be sent to a different company. Now, this is going to most likely cause some chaos within the student loan servicing world. In the past, whenever there's been a large scale servicing transfer like this, borrowers have experienced problems. And this is going to be one of the largest scale transfers we've ever seen. It's going to be roughly one out of every 4 borrowers having their loans transferred, or about 10 million people in total. We were looking at the math of this at some point, but that means they're going to transfer about $300 billion. And it's tough to imagine transferring $300 billion and not having a single problem. So we know there's a real risk of transfer errors. What you need to do if you've already submitted an employment certification form, or if you plan to in the next few weeks, update your contact information so they've got the correct address, email, phone number for you. Reach out to Fed Loan Servicing and request your complete payment history. They will send you every payment you've made since they started servicing your loans and back to October 1st, 2007. If there's some sort of issue, you want to make sure that you can say, I did this right, I've got proof of this here, and that will give you the ability to challenge any determinations made in the future that you disagree with. And the final thing that I think the Student Borrower Protection Center would always say to anyone is, if you think something's going wrong, file a complaint. That will, with the Consumer Financial Protection Bureau, with the Attorney General in Maine, that will create new oversight to ensure that they are handling this process the correct way. This is going to be stressful. It's stressful in the Department of Ed, it's stressful in other companies, but it's most importantly stressful on you. And as this transfer happens, we are definitely going to be asking a lot of questions. We are going to be watching to see what happens with student loans. And I'll just say, like, almost everyone that works at the Student Borrower Protection Center has a student loan who's serviced by Fed Loan Servicing, and we're all going to be filing complaints if we ever experience problems. So we're getting close to Q&A, and I see the chat box is a little bit larger and the Q&A box is a little bit larger. So I'm going to try and get through these next few slides so we can get into a conversation with you. But some unanswered questions that I just want to name that, like, we cannot tell you the answer to this yet, but we are asking, we are pushing. So some of these are like, will there be broad-based debt cancellation provided by the Biden administration? And we don't know. We know there's been a large, robust movement with high-profile backers. And we know that I was doing a webinar yesterday with someone at the Department of Education, and they've said the Department of Justice and Department of Education General Counsel is still looking into the president's authority to provide cancellation. We at the Student Borrower Protection Center are continuing to advocate for student debt cancellation broadly, but we know that something that the Biden administration can deliver today and right now is forgiveness via public service loan forgiveness. So we are really leaning into that in this moment while we continue to advocate for broad-based cancellation now and in the future. The payment pause was most recently extended to January 31st, 2022. The Department of Education and White House have said this will be the final extension of the payment pause. We don't know if it will be extended again. We are advocating for it to be extended again because so many of the student loan companies are leaving this market. If you are currently serviced by Fed Loan or one of the other servicers that leaves, we don't know who you're going to be transferred to. We know that so far 2 have announced that they're leaving, maybe more will. We are not sure, but we hope that the department will not rush into making people resume payments if there is a lack of clarity or if transfers are ongoing. But it is unclear who will take over your student loan if you're with Fed Loan Servicing or any other servicer that leaves. And will servicers be ready for an influx of borrower requests? So Fed Loan Servicing handles all public service loan forgiveness accounts today. When they leave, that means a new servicer will be taking, or servicers plural, will be taking over public service loan forgiveness. And if they receive millions of requests for employment certification forms or anything else, we don't know if they're going to be ready. And this is something we are pushing the Department of Education and the student loan industry to be prepared for. This is why we have advocated for the payment plans to be extended further to make sure that they are prepared for this. But these are unanswered questions that, MESAP, Student Bar Protection Center, many other advocates are pushing to get answers for. So if these come up in the Q&A, I unfortunately won't be able to give answers better than that. But I just want you to know that these are things that we're all asking. Now, in this moment, the Department of Education is currently requesting for the first time ever that borrowers share their stories about public service loan forgiveness. And that's because just a few years ago, the very first borrowers became eligible for public service loan forgiveness. The program was created October 1st, 2007, which means the very first borrowers were eligible October 1st, 2017. That month, about 90,000 student loan borrowers applied for public service loan forgiveness, and it went very bad. About 800 people of the 90,000 received forgiveness under public service loan forgiveness with a rejection rate of about 99%. Since then, the Department of Education has made tweaks to the programs that have taken that 99% failure rate to 98, which we would argue is still ridiculously short. Implementation is still very bad, and borrowers are still facing tricks and traps and bureaucratic red tape at almost every turn. Those 4 pieces of criteria are really knocking people off track, and often no fault to their own. If your student loan company didn't tell you to consolidate, if your student loan company sent you an inaccurate bill, if your student loan company put you in a repayment plan that was not eligible and told you it was, that's not your fault. The only thing you control is where you work. And even that, we've seen employers mess up filling out the employment certification form, leading to denials. We've seen so many powerful stories come into this public comment period. Again, it's the very first time the Department of Ed has ever thought to ask borrowers, workers, public servants, public service workers what their experience has been. They've always asked the student loan companies, they've always asked employers, like, what do you think the problems are? What do you think the solutions are? For the very first time, the Biden administration is asking borrowers what you think the problem is. And this is where we are encouraging people not just to share your student loan story, but to share stories of these breakdowns that could retroactively be fixed. So in this example of a legal aid attorney, so when they went to consolidate their loans, their student loan company inadvertently, no fault to the legal aid attorney, left out some of the loans from the consolidation. So that's not eligible for public service loan forgiveness. But if the congressional intent was you work 10 years in the public service and we'll forgive your loans, why does it matter if you have a FEL loan that's owned by the federal government or if you have a direct loan that's owned by the federal government? This is a arbitrary, narrow rule that makes no sense for the overall program, and we do not believe should disqualify you. So we are encouraging you, if you have an older FEL loan and have been denied public service loan forgiveness, tell your story about how you were not informed that you needed to consolidate. Tell your story about how you're giving your career to the public service, serving communities where you live, and that should be eligible, because they could determine that they will count those payments made on FEL loans if they want, and if they feel public and political pressure to. The deadline to share your story and submit your comment is September 24th. That's next Friday. I've got a bit.ly here that links to it. I know that MESAP is going to be dropping the link into the chat if they're not already, so you can click that and go share your story. But any experiences of misinformation, how student debt impacts your household, or unfair rejection, so wrong loan type, wrong repayment plan, payments not counting because you overpaid or underpaid or paid ahead, anything like that. Anytime your student loan company withheld information from you, anything that's ever gone wrong, put that in your story. We are encouraging people to submit stories through this Action Network page that dozens of unions, nonprofits, consumer advocates have agreed to build as a coalition. That way we can show the push we are making. More than 6,000 people have submitted comments through this page. We want to show the Department of Education that we are not going to just let 98% of people be denied this promise that was made to them quietly. You know, I just want to share another story from a teacher. I know this is Oregon and not Maine, but these are the sorts of things that are throwing people off public service loan forgiveness years at a time. You know, you can make 10 years of payments in an income-based repayment plan while working in the public service, but you have a failed loan, and none of those payments are going to count. And that's morally wrong. It's programmatically wrong. And this is our opportunity to tell them they need to change these regulations, take these criteria back, and go back to the congressional intent of 10 years of public service is all you need to achieve student loan forgiveness. So we're now going to move into Q&A. I'm going to turn off my share screen if I'm able to figure this out. The number of times I've judged others for not being able to. Stop share, got it. So going to open up Q&A. And Jody, if you've seen any questions in the chat or in the Q&A that you want to lob my way, feel free.
There, yes, thank you, Chris. That was a lot of information packed into a presentation, and we've got a lot of good questions. And maybe I'll just read them to you real quick, and you can respond. Direct loans being eligible for the forgiveness program, it doesn't matter if they're direct subsidized or direct unsubsidized. Is that correct?
Does not matter. As long as it's a direct loan, it will be eligible for public service loan forgiveness.
Great. How about, does revised pay as you earn, I think you answered this, revised pay as you earn count as income driven repayment?
Revised pay as you earn, also known as repay, is eligible for public service loan forgiveness. That's one of the income driven repayment plans.
Okay. Do you have to work at the same organization for the entirety of the 10 years?
No, and your payments also do not need to be consecutive. This is one of the big misconceptions about public service loan forgiveness. If you miss a payment or if you miss a year, if you take parental leave and aren't working for 6 months, that's fine. You can take time off of work, you can switch professions, you can switch employers. What we encourage is if you do switch employers to fill out the employment certification form, once you start at your new employer, just make sure everything's on track and there's no surprises down the road.
Yeah, that's good, because that leads into the next question. A couple of people have asked if they never enrolled in public service loan forgiveness originally 8 years ago when they started working in public service, have they lost all 8 years, or can they try to get those payments to qualify?
So you don't actually enroll in public service loan forgiveness. This is one of the difficulties with the program. So it's an all or nothing program. When you fill out the employment certification form, you're indicating your interest in someday achieving public service loan forgiveness. So there's no requirement that you fill out the employment certification form while you're working the public service. I believe I said this during the presentation, and just in case this is a question, everyone's going to be able to get a copy of this presentation, and the webinar is going to be posted, as Jody mentioned, at the forefront. But when you fill out the employment certification form, you're just making sure everything's on track. If you don't want to fill out an employment certification form, you can apply for public service loan forgiveness at the end of 10 years and still be able to get it. The ECF, or the employment certification form, is just to make sure everything's going right as you are making sure you're on track for public service loan forgiveness. So if you've not filled that out, you could be totally fine as long as you're meeting all those criteria.
Excellent, great. Another question, at the start of your 10th year or the 108th payment, could you pay a 12-month lump sum early and be forgiven? Early, I'm assuming they mean.
So you would not receive forgiveness early for 2 reasons. The first is you have to be working in public service at the time of forgiveness. So they are going to want to make sure you reach 10 years before you're eligible. If you could prepay for 12 months, which means you wouldn't need to make payments throughout the year, but you would still need to be working in public service 13 months later. Now, the second reason why it wouldn't work that way is the Department of Education under Betsy DeVos built up quite a backlog of applications for public service loan forgiveness. This is a huge problem. And the Biden administration is trying to find ways to work through it, but this has been a lingering issue for years. Right now, there's a backlog of about 150,000 people who have applied for public service loan forgiveness and not heard a determination. It can take up to 1 year in order to find out if you're going to be receiving forgiveness or not. which is very problematic because of what I just said. You have to be working in public service at the time of forgiveness. So we know there are some people close to retirement that should have retired, but are having to hang around so that if they receive Pslf, they're still working at the time and their loans will be forgiven so they don't retire with student debt.
Wow.
It's a huge problem. This is something, if you're submitting a comment, include that. If this has impacted your ability to retire, anything like that, this is something, or like trapped you in a job. This is something to include, because there's no reason why you should have to keep working if you're retirement eligible as you wait for a determination, because the Department of Ed is backed up by 150,000 requests.
Right.
That's not your fault.
Yeah. Great. Oh, Chris, this is so helpful. If you apply for public service loan forgiveness, but are rejected for whatever reason, can you reapply and make corrections? Is there some sort of waiting period?
So you can reapply, and I'll just say this is where you should think about filing complaints. This is where you should contact the Federal Student Aid, Student Loan Ombudsman. These people get things wrong. Like, I'm just going to lead with that. If you get rejected, do not assume all hope is lost. They get things wrong. I file complaints. My girlfriend has filed complaints. Like, it is possible that you've done everything right and they got something wrong. Now, if you did do something that needs to be corrected, like let's say you've got one of those older FFEL loans, what they will tell you today is you need to consolidate it and start over. And you're back at 0 payments and you're doing this for 10 years. That's part of why we're pushing so hard during this public comment period to say, don't let loan types, don't let repayment plans, don't let qualifying payments be the thing throwing people out. If you have been rejected previously because you had a FFEL loan or a Perkins loan, please submit that story. They need to hear that. They need to change this, both retroactively and moving forward.
Great. You make a good point when you speak of the ombudsman. Maine also has a student loan ombudsman, a new position. And I will find that contact information and put it in an email to all of you who register for the workshop, so you can have that contact in Maine specifically. Thanks for prompting that, Chris. So a couple of people have said they were told to consolidate their loans, and then when they did, they were told they lost their repayment status, as you described in your presentation, and they had to start over from 0. Did they have any recourse?
So unfortunately, at this time, there's not a recourse. Again, we are pushing for this policy to be changed because this is a bureaucratic red tape. This is one of the most egregious things I've seen in student debt. As of this moment, there's no recourse. And those are stories that the Department of Ed needs to hear, because if they decide to go bold on fixing public service loan forgiveness, there could be recourse. But as of today, we are not there. So by September 24th, share your story of that happening. Tell the Department of Education, if your servicer told you you were going to lose payments, tell in your story what you knew about it going in. Don't let them get away with like leaving this bad policy on the book. Share your story, encourage them to change it.
Thank you. Chris, has it been announced yet who the servicing companies are being transferred to? This was a nervous Fed loan borrower that's asking the question.
So no, this existing servicing contracts expire, I want to say December 14th, it might be December 12th. Between now and then, there is still potential that other student loan companies will leave the market and the Department of Ed will have to bring new companies in. So as a result, we're not sure who anyone will be transferred to. We're not sure who's going to stick around. We don't know who's going to leave. So for the time being, that falls into the unanswered category.
Okay.
Unanswered question category.
Yeah, okay. What about if a person has gone into default on their loan and moved into a collection agency? Would they still qualify for loan forgiveness under this program?
So if you've fallen into default, that means you've missed payments, which means you're not making on-time payments for the purpose of public service loan forgiveness. That doesn't mean you can't get there in the future. And there's a few ways to get out of default. You can either consolidate your loans, if you've not consolidated before. Consolidation's a one-time thing. You can only consolidate a loan once. So if you've gone into default on a loan that you've never consolidated before, the quickest and easiest way out of default is to consolidate it. You can, during that process, as I mentioned during the presentation, when you're consolidating, you can say, move me into an income-driven repayment plan. And then you'll have a direct loan that you're making on-time payments on and a qualifying repayment plan. But while you're in default, any voluntary payment you're sending a debt collector or that they are garnishing is not going to count towards public service loan forgiveness. The other way out of default, that's a little bit harder and more time consuming, it's called rehabilitation. That's where you have to make 9 out of 10 on-time payments that have to be a minimum of $5. Even if in an income-driven repayment plan, you would have been paying 0. When you rehabilitate, you have to pay a minimum of 5 and sometimes have to advocate for that minimum. If you visit a website called forgivemystudentdebt.org, there's more details on the step-by-step process of how you rehabilitate a loan there. It's forgivemystudentdebt.org. Just go to how to get out of default. It's going to explain the process for rehabilitation and consolidation. The quickest and easiest way that I recommend, if it's an option, is consolidation. But after you're out of default, those payments you make that are on time while working for a qualifying public service employer and all the other criteria, those will begin to count. It doesn't mean you can never get it.
Okay, good, thank you. This person hasn't made any payments yet. They graduated during COVID, so haven't had to make any payments. They have sent in their Pslf form to make sure they'll qualify. Should they also still request a payment history from FedLoan, or is that unnecessary?
No, I would absolutely do that, because during the payment pause, any payments that you would have been required to make that were suspended because of the payment pause, those are going to count towards public service loan forgiveness. So even if you've never made a payment, if you would have been making payments, you want to make sure you've got a copy of that because you might, when you make your very first payment, actually have 12 payments already made that are Pslf qualifying. So I would definitely request that.
Okay, great, thank you. Is there any recourse for payments that are deemed ineligible?
So this is where you have to go through the ombudsperson, and there's a Maine ombudsperson, then there's a federal student aid ombudsperson. The federal student aid, or FSA, is what I was going to say. I'll try not to use acronyms. I've tried not to, and I apologize if I have during this presentation. The federal student aid ombudsperson is Bonnie Luttrell. If you reach out to her office at the federal student aid, you can challenge payments that have previously been deemed ineligible if you believe they should have counted. I will send over Bonnie's general office's contact info to be included in any follow-up to this webinar so that you can find the best way to contact her, or her office, but that's who you would go to if you've been told a loan is ineligible and you believe it should count, or a payment is ineligible but should count. And it looks like we might have lost Jody while I was answering that. Jody is rejoining. I do see Bethany's question, so I'm just going to answer this really quick. When should you make that request for payment history to FedLoan? I would make it now, and I would make it again in probably November. So I believe the process is in December, they're going to start the transfers. That's not been totally confirmed, but I would request it now because you'll have many years potentially. And then I would request it again right before you get transferred, for the same reason that I would request payment history, even if you've never made a payment. If you're going for public service loan forgiveness, any non-payment you're making right now is still going to count because of the payment pause. Jody, I just answered Bethany's question.
Excellent, thank you. Sorry about that blip out.
No,
There was a question that you might not be able to answer, Chris, but it has to do with the Maine specific program, Opportunity Maine, which is a tax credit on student loans for people who are working. And this program, is there overlap? Should he apply for one or the other or both?
So typically with state specific programs, there's no interaction with public service loan forgiveness other than you might be able to get both a state specific aid I'm sorry, my little helper's shown up into the room. If you can hear me yelling, I apologize. I'll make sure he doesn't jump on the desk. So with the state-specific programs, you can get the benefit of the state aid, and then at the end of 10 years, 120 payments. It could take you longer than 2 years, but you can get public service loan forgiveness. When I worked at the American Federation of Teachers, we had some teachers that went for teacher loan forgiveness, which if you work in a Title I school, teaching in certain professions, you can get that. They would do that, and then 5 years later, with the remainder of their loans, get public service loan forgiveness. So teacher loan forgiveness is forgiveness up to $5,000 to $17,500. It didn't prevent you from getting both, and this would be the same with Opportunity Maine.
Good.
Just make
And
sure you're
the
doing
other-
the 5 things you need to for public, or the 4 things you need to for public service loan forgiveness.
The other point with Opportunity Maine, it is a tax credit. So you would have to be working, paying taxes in order to get a credit back on what you paid in. So for someone
It
who's
sounds like
unemployed,
you both.
for example, yeah, exactly. So, and yeah, do both. Great. Okay. Recommendations on the first steps or questions to ask our student loan company. My loans have changed several times over 20 years. I've been told so many different things that it's overwhelming and confusing. So where to start?
I would start by asking for a payment history and a loan history. The first thing you can do is just build out a basic form of what kind of loan do I have? Is it a FFEL loan? Is it a private loan? Is it a federal loan? If it's a federal loan, is it a direct loan? Is it a Perkins loan? You know, understanding what kind of loan you have is the first step to understanding what choices you have, because each loan is eligible for different programs. So I would start by asking that. I would then try and find out the payment history. Like, are you current on payments? Are you behind on payments? Are you in default on payments? Because then that takes you to the next step of figuring out what's best for you in your situation. And I would say once you've got a good handle on what kind of loan you have and where it is and status, you can then make a game plan. Like, talk to that company and say, you know, what would I pay under every repayment plan that I'm eligible for? What forgiveness programs could I be eligible for based on where I live and my employment status? And if you have any questions, you can always email pslf@protectborrowers.org. That's an email account we've set up for individuals that have questions about public service loan forgiveness. You could email us any questions you've got after you talk to your student loan company about loan type and repayment plans and repayment status.
Great. Thank you for that offer. Chris, is there a tracker for eligible and ineligible payments in Fed loan? And how do they request formal documentation to make sure everything transfers correctly? For example, would screenshots hold up?
So the first half of the question, is there a public service loan forgiveness payment tracker? Fed loan has one. The Department of Education created one that will be the one used long-term, because Fed loan is going to be leaving this position. So if you go to studentloans.gov, you should be able to see a tracker that is up to date. It's the last time you submitted an employment certification form. I'll be honest, say I haven't used it frequently, but I know it's there. And based on the fact that Fed loan servicing is leaving, the Department of Education has made it clear they intend to double down on this and build this out so it's a lot more effective and more accurate. What was the second half of that question, Jody?
So what kind of formal documentation is needed to make sure everything is transferred correctly? And then as a type of documentation, would a screenshot hold up?
So if Fed Loan Servicing is your current student loan company, ask for a payment history. They should send you either an Excel doc or a text doc, and that's going to have all the original files and signature marks. That way you could send it to a future servicer to dispute. Screenshots will give you something to stand on and it might win, but asking for those files to be sent over is the surefire way to make sure that if there's a dispute, you've got what you need in order to back up your case.
Great, thank you. Your loans must be with Fed service or new company taking over before you can qualify for public service loan forgiveness. Is that correct?
No, so again, employment Filling out the employment certification form is an optional thing. You don't have to do it. We encourage it to make sure you're on track. But I have known people that have worked 10 years in the public service while paying on a direct loan in an income-driven repayment plan, making full on-time qualifying payments. And because they thought Fed Loan Servicing wasn't a great company, they just never filled out an employment certification form. They then sent in their application and received forgiveness. Fed Loan Servicing never touched their student loans. They never had to. But I will qualify that and say these were lawyers that work on student debt related issues, and they needed to be lawyers working on student debt related issues to get through this process without Fed loan intervening in some way. So it is possible, but it's not easy. I can't do it. So I would encourage you to do that. If you've never had Fed loan servicing, it doesn't mean you're ineligible. You don't need to be with Fed loan servicing. If you've done everything right, like that's terrific, and you should fill out the application. But yeah.
Okay, great. I know we are up against time. I have one more question in the chat that I'll ask you. And this again relates to consolidation, and I think you addressed it in your presentation, but maybe just reiterate. This person has not yet consolidated their loans and wants to apply for public service loan forgiveness. Should I not consolidate my loans? And could you just go over again those criteria for what
So
consolidate, what not?
So if you're nervous about this, this is where I would say feel free to reach out to us at pslf@protectborrowers.org, and I'll make sure that goes into the email. But if you have direct loans, if you consolidate those, that will reset the clock, the 120 payment clock. So what you would want to do is consolidate any ineligible loans. So any FFEL loan, the Federal Family Education Loan, on your monthly bill, it will pop up as FFEL, FFEL, or FFELP, FFELP for Federal Family Education Loan Program. Perkins loans, those are going to be ineligible at the moment. So you'll need to consolidate those. So when you fill out the consolidation form, you check boxes of all of your loans that you want consolidated. I would just say, if you are in a situation where you're unsure, reach out to us and we'll help you review and figure out what's going to make the most sense for you. But those ineligible loans, if you're hoping to get public service loan forgiveness, you're going to have to. So you'll want to select any FFEL loan, any Perkins loan, those ineligible federally guaranteed loans. As long as it says direct, it should be eligible, and we can help you review that. But if you've made qualifying payments on those, you would not want to include those. You would not want to check that loan when you're filling out the application.
Chris, could you say one more time the email for people to email with concerns?
Yeah, and I'm also just going to drop it into the chat, but
that'd be great.
PSLF, as in Public Service Loan Forgiveness, at protectborrowers.org. But it's in the chat. If you've got questions, you can always reach out to us there. You could also visit our website. We try and answer a lot of these questions. It's not meant to be necessarily a tool for how to apply for this as an individual, but you can see reports, investigations, issue briefs, blogs we've done on this, where it's the tricks, traps, when people are getting stuck, where the red tape can be overwhelming. But you can always reach out to us. You can, if you tweet at, so I'm going to type in our handle real quick. We're the SPPC. If you tweet at us or direct message us, we can also try and get back to you there. But email is typically the best, most secure. That's where we can ask for files and things like that if we need to review anything to make sure we're giving you the best advice for your situation. But don't hesitate to reach out.
Thank you so much, Chris. This has been so amazingly helpful for me. And I thought I knew a lot about this program, so thank you. I just wanted to remind folks that we will send up a follow-up email to everyone who registered with a copy of the recording, so you can watch it again, with the name and contact for the ombudsman and the email that Chris just posted in chat. And just one last reminder is, if you have a story to share, if you've experienced problems with your forgiveness loan forgiveness application, please share this story. The more stories we can get, the stronger our case will be to get the Biden administration to fix the program, correct some of these issues that we're seeing time and time again by borrowers, and really just drive home how important it is to do something to fix this program now. So, thank you, everyone, for participating. Chris, thank you again. Please extend my thanks to Seth. And I hope everyone has a great day.
Thank you for
Bye-bye.
having us.